Gentlemen, good morning. Good morning and welcome to the fifth monetary policy announcement for the year. We are delighted to welcome our media practitioners and wish to thank you for honoring our invitation to join us today. We also wish to extend a warm welcome to all of our online viewers and for those who are tuning into the broadcast that is coming to you live from the Bank of Namibia auditorium. Over the past 2 days, the Monetary Policy Committee, chaired by the Governor of the Bank of Namibia, convened to discuss and determine the appropriate monetary policy stance for the country for the next 2 months. A decision was reached yesterday, and the Governor will announce and unpack it shortly. This morning we'll be doing things slightly different, as following the delivery of the Monetary Policy Statement, the Chairperson of the Monetary Policy Committee and the Governor of the Bank of Namibia will return to provide a brief presentation. In the presentation, the Governor will offer deeper insights into the global and domestic economic factors that informed the committee's decision. The Governor will also provide an update on key developments, including the upcoming Eurobond redemption, the bank's gold acquisition strategy, and the recent currency issuance. Thereafter, we will then open the floor to questions from members of the media. Those will be the proceedings for the morning. Once again, welcome. My name is Nafiku Hamunime, and I work for the Bank's Strategic Communications Department. With those introductions out of the way, let me now welcome the Governor of the Bank of Namibia, Dr. Johannes Gavachab, to the floor to deliver the monetary policy announcement. Governor, the floor is yours.
Good morning and welcome to the MPC announcement. The Monetary Policy Committee of the Bank of Namibia decided to reduce the repo rate by 25 basis points to 6.5%. This was done to continue supporting the domestic economy while safeguarding the peg between the Namibia dollar and the South African rand. This was done following a review of international, regional, and domestic economic developments. Our decision to reduce the repo rate is entirely data-driven. Let us consider the factors in the domestic economy that has informed this decision. Domestic economic activity has weakened, inflation remains subdued, while growth in private sector credit extension has improved further, although it remains relatively weak. The merchandise trade deficit has narrowed further, while the stock of international reserves remains sufficient to maintain the currency peg and meet the country's international financial obligations. Real gross domestic product growth has surprised on the downside, falling to a post-pandemic low of 1.6% year-on-year in the second quarter of 2025, from 3.3% during the corresponding period in 2024. This poor performance was primarily observed in the manufacturing, fishing, and agriculture sectors. High-frequency indicators further corroborate this trend, suggesting that the pace of expansion in economic activity during the first 8 months of 2025 has slowed compared to the same period in 2024. Looking ahead, real GDP growth for 2025 is projected to decline from 3.7% registered in 2024, with downside risk now more pronounced. Annual inflation remains contained, averaging 3.6% during the first 8 months of 2025, compared to 4.6% during the same period in 2024. This disinflation was primarily reflected in the categories of housing and alcoholic beverages, augmented by deflation in the transport category. Moreover, consumer price inflation has remained unchanged at 3.5% in September 2025 relative to its level in July 2025, although it temporarily dipped to 3.2% in August. Looking ahead, inflation projections for both 25 and 26 have been revised downward by 0.2 percentage point to 3.6% and 4% respectively, compared to the previous forecast. This revision reflects a stronger exchange rate assumption and a downward revision to the oil price outlook. Risks to the forecast remain exchange rate volatility and potential upticks in administered and oil prices. The annual growth in private sector credit extension has continued on a gradual recovery path, rising to a post-pandemic high of 5.8% in August 2025 and remaining above the 5.7% recorded in June 2025. Similarly, the improvement in credit to the private sector was observed in the year-to-date average growth rate, which stood at 4.9% in the first 8 months of 2025 relative to 2% during the same period in 2024. Overall, the improvement in PSC was mainly driven by stronger credit uptake by businesses, while households lagged. Pivoting to the external sector, Namibia's merchandise trade deficit narrowed by 16.1% to 17.9 billion Namibian dollars during the first 8 months of 2025 relative to the corresponding period in the previous year. The improved trade deficit was on account of a faster increase in export earnings, especially from uranium and gold, relative to import payments during the period under review. The stock of international reserves stood at 54.7 billion Namibian dollars at the end of September 2025, a decline from 58.1 billion Namibian dollars recorded at the end of July. The reduction in foreign reserves was mainly ascribed to elevated imports, foreign payments by the government, and a stronger exchange rate. This level of foreign reserves translates to an estimated import cover of 3 to 6 months, remaining adequate to sustain the currency peg between the Namibia dollar and the South African rand and meet the country's international financial obligations. Let's consider international developments. The global economy continues to exhibit resilience. However, the medium-term outlook suggests marginally slower global growth. Since the previous MPC meeting, inflation patterns have diverged across monitored economies. Key global markets, stock markets gained, while bond yields fell. The US Fed lowered its policy rate for the first time this year, while other monetary policy authorities mostly held the policy rates steady since the previous MPC meeting. Global growth has remained relatively resilient since the last MPC meeting. According to the Organization for Economic Cooperation and Development, growth in the group of 20 economies, the G20, edged up slightly in the second quarter of 2025, largely sustained by the United States and India. Looking ahead, the IMF has projected global growth to moderate from 3.3% in 2024 to 3.2% in 2025 and 3.1% in 2026. The 2025 growth forecast is 0.2 percentage point higher than previously projected, reflecting gradual adaptation to trade tensions. Most monitored commodity prices have trended upwards since the previous MPC meeting. The price of gold has surged since the August MPC sitting, setting a record high most recently buoyed by increased safe haven demand. Furthermore, zinc prices have continued their ascent, mainly due to tight global supply conditions. Despite a recent drop, copper prices remain notably elevated, ascribed to concerns regarding supply shortages amid disruptions at key copper mines. Turning to the energy sector, the uranium spot price has sustained gains, supported by supply constraints and rising demand. Conversely, crude oil prices have eased further, mainly due to increased supply and most recently concerns regarding the imposition of higher US tariffs on Chinese goods. Diamond prices were slightly lower than 2 months ago, partly reflecting continued competition from lab-grown diamonds. Key global stock markets generally recorded gains since the last MPC meeting, with a notable gain extended by the S&P 500, driven by technology stocks. Meanwhile, bond yields trended down across monitored economies, with significant declines in the United States and China. Bond yields also fell in South Africa, underpinned by stable fiscal signals and lower inflation expectations, amid the central bank's expression of a preference for a low inflation target. Since the last MPC meeting, inflation trends have diverged across key economies. Among the advanced economies, inflation ticked up in the United States, the United Kingdom, and the Euro area, while it continued to moderate in Japan. In contrast, inflation generally slowed in the monitored emerging market and developing economies, except in South Africa, where consumer prices edged up. Meanwhile, China recorded deflation during the same period. Looking ahead, the IMF's projections for global inflation have remained broadly unchanged, with inflation forecasts to decelerate from a revised 5.8% in 2024 to 4.2% in 2025 and 3.7% in 2026. Most of the monitored central banks held policy rates steady since the August 2025 MPC meeting. The exceptions were the US Fed, which implemented its first rate cut for the year, and the Bank of Russia, also with a reduction. So given this, we need to consider the monetary policy stance. In determining the appropriate monetary policy stance, the committee considered the weaker domestic economic activity, well-contained inflation, and a favorable medium-term inflation outlook. Year-to-date capital flows were assessed to be orderly. The relatively high real repo rate and adequate foreign reserves were also deemed to be supportive of a reduction in the nominal repo rate. The MPC was worried that the lowering of a repo rate would widen the gap between the domestic policy rate and that of the anchor country, but was of the view that its magnitude falls within the boundaries where capital movements remain well contained. Moreover, while there is imminent pressure on foreign reserves due to forthcoming Eurobond redemption, thorough preparation in anticipation of this event has ensured that Namibia's foreign reserve adequacy is not jeopardized. Against this background, the MPC decided to reduce the repo rate by 25 basis points to 6.5%. Commercial banks are accordingly expected to cut their prime lending rates by the same margin to 10.125%. This policy stance will continue to support domestic economic activity while safeguarding the one-to-one link between the Namibia dollar and the South African rand.
Thank you very much, Governor. As the Governor noted, this policy decision was informed by a comprehensive review of regional, domestic, and global economic conditions. The Governor will now unpack the key economic and financial factors that inform this decision, and as well as provide a key update in terms of developments that the Bank of Namibia is managing. If we can kindly ask for the presentation to be pulled up. Thank you very much.
So what I'm going to do is to give a little bit of color on global and domestic economic activity in the first part of the presentation. The second one, I will consider questions that we are receiving on our gold acquisition strategy, on the new currency you've issued, questions we are getting on Eurobond. That's the second part, whereafter we'll provide you an opportunity to pose questions. Let's consider the global economic outlook. Global growth forecast is revised up modestly, but it still remains subdued. Global growth is projected to slow from 3.3% in 2024 to 3.2% in 2025 and 3.1% in 26. This is due to the impact of uncertainty and protectionism, although the tariff shocks is smaller than originally anticipated. When you have got policy uncertainty to a large extent, that constrains investment and it also constrains consumption. With protectionism, what happens is it disrupts supply chains and it stifles productivity. In advanced economies, growth is projected to moderate to 1.6% in 2025 from 1.8% in 2024. In the US, growth is anticipated to ease to 2.2% this year from 2.8% in 2024 on account of policy uncertainty, higher trade barriers, and lower growth in the labor force and employment. Real gross domestic product growth in China is projected to slow to below 5% in 25 and in 20. There is a new engine of growth that comes through in India, where growth is projected to be 6.6% in 2025 and 6.2% in 2026, owing to a strong performance of the services sector. Let's consider the global inflation as the next slide. Global headline inflation is projected to decline to 4.2% in 25 and 3.7% in 26. Food, energy, and administered prices contributed to this downward revision of inflation. In the US, inflation is expected to pick up, commencing in the second half of 2025 due to tariffs. Core inflation has risen in the US and unemployment has edged up. Among emerging and developing economies, inflation forecasts for Brazil and Mexico are revised upwards. What are the policy priorities given these challenges that we see in the global economy? The prescription is restoration of confidence through credible, predictable, and sustainable policy actions. Over the medium-term, fiscal consolidations should involve realistic, balanced plans that combine the effectiveness of spending and revenue generation. We also need to rebuild fiscal buffers and safeguarding debt sustainability. That is the prime priority given the global economic outlook. We also globally, regionally, and domestically need to preserve the independence of central banks for us to anchor inflation expectations and enable them to achieve their mandates. Let's come back home and look at economic growth and inflation outlook in Namibia. Namibia's growth is projected to decelerate in 2025 before rebounding in 2026. This deceleration is primarily due to weak global demand and adverse weather effects, with real gross domestic product growth expected to moderate about 3% in 2025, which is slightly below the 3.7% recorded in 2024. The slowdown in our economic activity is attributed to a contraction in primary industries. It's largely diamond processing, it's meat processing, and also in the life subsector where some rebuilding of herds is taking place. Additionally, the diamond sector is expected to decline due to a weak global demand and rising competition from lab-grown alternatives. However, growth is forecast in Namibia to recover to 3.9% in 2026. This recovery will be supported by a rebound in agriculture, continued strength in the construction sector, and improved output in the uranium and gold sectors. Let's look at the inflation developments in Namibia. Over the medium term, inflation is revised downwards for both 2025 and 2026. The inflation forecast is revised downwards by 0.2 percentage points for both 25 and 26, relative to what we have informed you the August 2025 MPC. This is because of lower fuel price assumptions and the appreciation of the domestic currency. As highlighted in the previous MPC meeting, there are still upside risks to the medium-term outlook, primarily stemming from reacceleration of global inflation. Exchange rate adjustment brings the baseline forecast for 25 and 26 to an average of 3.6% and 4% for the year thereafter. The downward revision is attributable to volatility coupled with potential oil price shocks and acceleration of administered prices. Let's look at the development and the trade balance. Namibia's current account deficit is expected to widen in 25 before moderating in 2026. As a percentage of gross domestic product, the deficit is estimated to increase to 14.7% in 2025 from 14.4% in 2024. This slight widening is attributed to lower receipts from SACU and increased outflows on the primary income account. Looking ahead, the deficit is anticipated to ease to 13.9% of gross domestic product in 2026 as exports increase at a faster rate than imports. On merchandise trade developments, the trade deficit is expected to narrow to 13.9% in 2025 to 12.8% in 2026. And that improvement is expected to be primarily supported by a rise in export earnings, mainly from uranium and from gold, combined with moderate import growth due to an expected stable crude oil price. Let's consider our reserves. Our foreign reserves at the end of 2025, gross international reserves stood at 54.6 billion Namibian dollars, reflecting a decline mainly due to the net commercial bank outflows of 1.4 billion Namibian dollars. Additional pressures came from government payments, albeit lower than the previous month, and maturities in the customer foreign currency portfolio, which outweigh new placements and reduce reserve holdings by about 941 million Namibian dollars. Exchange rate valuation effects also played a role as the South African rand strengthened to 17.25% against the USD, further impacting the dollar value of the reserves. By 8 October, reserves have rebounded to a preliminary level of 57.9 billion Namibian dollars, supported by SACU receipts. At this level, the import cover stands at 3.8 months or 4.2 months excluding oil and gas, both of which are well above the international benchmark of 3 months. Let's look at the projected flows on reserves. Looking ahead, reserves are projected to reach 47 billion Namibia dollars by the end of this year, 2025, equating to an average of 3 months of import cover, still within the international benchmark threshold. This would represent 25.11% decline from the 2024 year-end level of 63 billion, largely due to the anticipated 750 million US dollar Eurobond redemption on 29 October. And that is roughly about 13.29 billion Namibian dollars if you convert it at the exchange rate that we'll be sharing with you very soon. Despite the projected decline, the reserve position remains robust, and proactive measures are in place to safeguard the country's foreign reserves and ensure the bank's continued ability to meet external obligations. Notably, the bank is exploring currency swap line arrangements with other central banks and financial institutions to further strengthen its reserve position. In 2026, reserves are expected to slightly improve to about 53 billion Namibian dollars, driven by slightly higher SAGU receipts compared to 2025. Additionally, ZAR outflows are expected to be more subdued as they are typically associated with periods of elevated government spending. With the expected reimbursement from the state for the overdraft facility, pressures on reserves is likely to ease, supporting a more stable outlook for 2026. Let's consider global financial stability and briefly the impact thereof on our economy. Globally, the first sign that the ground is shifting in terms of financial stability is the continued appreciation of risk asset prices. Markets appear to downplay the potential effects of tariffs on growth and inflation. These observed macro-financial vulnerability might have a spillover effect on exchange rate volatility, triggering capital outflows, especially in emerging markets, that it impairs liquidity. A second risk is that debt has continued to shift towards the government sector as expanding global fiscal deficits propel sovereign bond issuance. The growing size of non-bank financial intermediary and deepened ties with banks have heightened the seasonal interconnection. The effects thereof on domestic financial stability is global economic uncertainty and financial stability, if we don't contain that, could have spillover effects on our domestic financial system through various channels, including the real economy, financial markets, exchange rate, and capital flows, which could undermine our financial stability. The way forward is to maintain strong capital and liquidity buffers, supported by robust crisis management frameworks, as well as strengthen the financial sector safety nets and oversight of the non-banking financial sector. Overall, the risks to the Namibian financial system remain low to moderate, with potential vulnerabilities arising from global uncertainty. The Bank of Namibia will release its financial stability report, the mid-year review, next week, Tuesday. This will be the first time a mid-year review is released to the public, and it will become the standard practice going forward. We owe it to the public to not only inform them about financial stability developments once a year in April, but at least twice a year, and we'll start with that next Tuesday. Let's consider something that's very dear and important for this country, that is on the diamond sector. The diamond industry globally and in Namibia is facing headwinds that are expected to persist in the medium term, driven by both structural and cyclical factors. The industry has been on a downward trend since 2022, negatively impacted by various factors, including the increasing market share of lab-grown diamonds, weak consumer demand from major economies such as the US and China, and increasing supply from some producers selling at very, very low prices. Most recently, tariff-related uncertainties continue to exert pressure on the diamond trading environment. Going forward, industry experts are anticipating a recovery around 2027, driven by increased marketing of natural diamonds, coupled with improving growth in major economies, as well as trade agreements with the US for natural diamonds to form part of the exempted commodities. While the outlook for diamond industry is positive, there are risks posed by tariffs, lack of coordination, where some countries continue to push volumes at very low prices, and there is serious competition from lab-grown diamonds. If we look at the diamond mining production in Namibia, that is expected to contract by 4.5% in 2025 and by 5.7% in 2026, following a 3.7% contraction in 2024. So you see contraction from 24, 25, 26. So 26 in particular will be a very challenging year for the diamond market in Namibia. Diamond's contribution to the fiscus in terms of corporate income tax, royalties, and dividend payments has reduced substantially. Domestic diamond companies remain cash constrained due to debt service obligations, falling revenue, and key investments to enhance efficiency. As a result, the industry is facing serious headwinds in the medium term and will require support from authorities going forward in the form of an extension on the royalty relief due to end at the end of 2025. It's important that we support, particularly NAMDEB, through these difficult times to continue its operations. The company is paying taxes, it is employing about 3,000 employees, it's supporting about 14,000, 15,000 residents in Oranjemund, and they're going through a very difficult time it's not of their own making. They are victims of global developments in the diamond sector. And as a country, it's important that we support not only the company, but the workers and the sustainability of that town. Let's consider then what's happening. Another question that we are receiving is on our currency. So let's move on to currency developments. And first deal with the latest status on the Hage Geingob commemorative banknote. We have printed 2 million copies of the 60 Namibia dollar banknote to date. 717,000 pieces, or 36%, have been issued through commercial banks. So the progress is very well. It's very healthy. We are very satisfied with the progress that we are making at around 36% at this stage. One of the largest commercial banks has calibrated its ATMs, is now dispensing the 60 Namibia dollar commemorative note as of today. So once the commercial banks start dispensing, it's going to be easy, and the first commercial bank has started doing that. Interest from international collectors markets remains strong, with approximately close to 9,900 pieces from the initial print run already procured globally. Engagements with other banks are underway to ensure they follow suit in due course, so that they can start dispensing the $60 commemorative note also through the ATMs. Let's consider then what's happening, what's the update on the new currency that we have issued recently. To date, all commercial banks can dispense the new currency, which is available at both the ATMs and within the banking halls. So all commercial banks can dispense that. They can issue, distribute that. Integration of cash handling equipment with the new currency series is 85% complete, ensuring industry-wide readiness. Since issuance into circulation, the total value of the new currency issued amounts to about 225 million Namibian dollars. Deposit taking, that's opposed to dispensing. Deposit taking empty ATMs, parking meters, and vending machines are not yet fully calibrated for the new banknotes. Calibration is anticipated and we should have this in place by the end of November 2025. But many people are saying we cannot deposit at the ATM. You can just walk into the banking hall and deposit your money. So it's not something that's very difficult. So if you cannot find an ATM, our advice at this stage, until the ATMs are calibrated for deposits, is to just walk into the banking hall and deposit your money. It's quite important that we impress upon our countrymen that mutilating national currency is unlawful. It's a crime. Some people are defacing. That's a very selected group of people. The majority of Namibians are happy with the new currency, happy with their coins, but you have got a selected group of people that are defacing, mutilating our currency. In terms of the act that we have got, that is unlawful, that is a crime, and you can be prosecuted. Offenders face up to 50,000 Namibian dollars fine, 3 years in prison, or both. So let us appeal to those few people. This is our pride. That's our identity. That's who we are that's being depicted on that currency. So let's be proud of who we are as a nation. And when you see people are defacing, mutilating, damaging our currency, let us know that is unlawful. That is crime. Then let's move on to the questions that we are receiving around the Eurobond redemption. Let's provide a bit of history on the Eurobond. The Eurobond was issued, the second Eurobond was issued in 2015. It was targeted towards the development needs of the country, but to support the budget and the balance of payments, and the Eurobond must be redeemed by 29th of October. That's the maturity date of that. If you take the US Namibia dollar exchange rate and assume it's going to be 17.5, it's going to be a total amount of 13.5 billion that we'll have to redeem. And we have mobilized the full amount. And that mobilization is within the sovereign debt management strategy of the bank. So there was a very clear plan that has been crafted for the event that's going to happen on the 29th of October. It's not something that is a surprise to the country. There was proper planning to make sure we put in the necessary resources, and that will be mobilized. In terms of readiness, scheduled delivery of funds towards redemptions are ahead of the due date. There's very close cooperation between the Bank of Namibia and the Ministry of Finance. For investors out there, this redeeming underpins sovereigns or Namibia's commitment to ensure our creditworthiness. So if we issue paper, this is a clear testament that we are committed to deliver on our promises. The economic fundamentals of the country are above board. That's on the Eurobond. So many people are asking, have we mobilized the money? Do we have the money? Are we going to deliver on that one? And it's important that you need to know that all the resources have been mobilized. We are ready for redemption on 29 October 2025. Let's move on then to the gold reserves. So many questions are asking, why do central banks and also the Bank of Namibia, it's not only Bank of Namibia, most central banks are acquiring golds, and it is a strategic asset. It's being used as diversification and to mitigate the risk. It's a store of value and inflation hedge. It's got good liquidity and it's globally accepted, and it's strategic, and it gives you autonomy as an independent country. So that is what we are seeing in terms of why central banks, including the Bank of Namibia, is acquiring gold. The gold price set record highs recently, driven by ETF flows, safe haven demand, and a weaker US dollar. Many central banks are actually getting into gold, acquiring gold, and of late, even individual investors are getting into ETFs, that's exchange-traded funds, to acquire gold as a saving mechanism, as a diversification of their individual portfolios. Going forward, gold prices will remain supported by the broader theme of many people are saying, let us try and pay in our own currency and let us try to mitigate against having all our assets into one currency or one asset class. Let's add to gold as an asset class. Right, so let's move on to the next slide. So what is our gold accumulation strategy? The Bank of Namibia has commenced with gold accumulation as part of its foreign exchange reserve management strategy. So when you go into our forex reserves, you'll see gold, you'll see US dollar, and you'll see the South African rand. So it's going to be part of that strategy. We're going to acquire our gold from our local mines. We're not going to go and buy gold from outside the country. We're going to go to Navahab and go to B2 Gold. And if Osino is up and running by 2027, 28, we'll probably, if that is still the needed, acquire from Osino. The gold that we'll acquire will have to meet the international London Bullion Market standards. So good gold bars, purity of 99.9%. That's what it makes it a foreign reserve, that it makes it liquid and acceptable internationally. We're going to keep the gold in our vaults at the Bank of Namibia. It will form part of our exchange reserves. People are asking, how much are we going to buy? So if you look at entire reserves that we have got as a country, 3% thereof is what we are targeting in terms of gold. So at the end, if we have acquired everything, that total reserves, 3% thereof will be gold. So it is strategic value in hedging against inflation and enhancing resilience during economic shocks. So we are planning to have this physically before the end of this year in our vaults. Let's move on to, I think, the second last slide. Oh, that's the last slide. Thank you very much. Happy to take your questions.
Thank you very much. We will now open the floor to questions from the media practitioners in the room. For the first round of questions, we kindly ask that the questions be limited to questions that speak to the economy or key factors that influence the decision. Thereafter, in the second round, we can then have other questions that speak to the key updates that the governor shared. So can I ask, are there any questions in the room? If so, please make your way to any of the microphones. They're situated on either side of the room. Remember to state your name, note the organization that you represent before asking your question. There's a microphone right behind you.
Good morning, everyone. Good morning, Governor. I'm not sure, but the question is related to what the governor just actually spoke to. The Minister of Finance has earlier announced that her ministry, in collaboration with the bank, will be holding public consultations on the newly launched notes. Is it not too late to do that since the notes are already in circulation?
Is could just help me, public consultation on what? On the design, on what we consult? What did the minister say?
It's on the design of the new notes and coins.
Okay.
Thank you. Any other questions? Oh, it's not related to the decision, okay?
We can open up.
All right.
Yeah.
If there are no other questions, then please feel free.
Good morning. Thank you for the opportunity. Okhane from Market Watch. Related now, obviously, to developments in the economy, we've seen there's this excitement around oil and gas. Do you anticipate, perhaps, as the central bank, an increase in the number of applications for banking licenses? And then secondly, you've touched on issues related to the diamond sector. Anglo-American is obviously ridding its stake in De Beers. Angola has expressed interest. Botswana is looking at it. As advisor to government, what is your opinion? Should we be looking at this, irrespective of what stake it would be? But just what is your feeling on that? Thank you.
Right, let's deal quickly with those. So that's not difficult. I think what the minister probably meant by we'll have to work with Bank of Namibia to consult the public is for future designs. At this stage, I think we have done what we are supposed to in terms of our stakeholder engagement. And many Namibians are happy with their currency. I think it's like a democratic country, like anyone. There will be a few people that wouldn't like that. But the majority of Namibians like their currency, both coins and the notes. And what the minister probably meant was for future designs, or if there are issues they've picked up in the current designs, we are happy to listen to that. But in terms of the actual design, we have finalized that. Excitement around oil and gas, increase in licenses. I think our regulations are pretty straightforward. If anyone wants to apply for a banking license, you just go to the website of the Bank of Namibia. The requirements are listed, and if you feel that you would like to apply and you meet the requirements, we will grant you a license. In terms of advice to government whether we should acquire stake in De Beers, I think Minister of Mines and Energy Industrialization, they are the constitutional advisors to government when it comes to diamonds. So I think we should ask the question over there. Direct our question to that address. Sure.
Just for the public's sake, again on the new notes, Governor, everyone is asking this question: why was one of the animals, I'm now not sure which animal, were removed from the $10 and $20 Namibian dollars, and the youth kind of feel like, why the young one? Why not the mother or the dad or something like that? Yeah, but why was the young generation removed from the notes?
I don't think that was tongue in the cheek. I thought there was Namibian humor. So it was not something serious. What happened is we had 3 Springbok at the back of the back side of the $10 note, and it was too busy. So if you look at many other security features that we needed to build in and upgrade it, particularly for the visually impaired, many people don't know how many things we have done with that $10 note to include the visually impaired. So the reduction from 3 to 2 was merely, it was so busy, build in more security features, make it more accessible for the visually impaired Namibians. And it was not really that we had other intentions, but I thought that's Namibian humor. People are just making jokes. But it was too busy. So and if you do a new design, we needed a neat, sleek design. And 2 gave us that, and in addition, it helped us to improve on the security features. We increased the size of the note, tactility is different. You know, if you look at the thread, it's totally different, and we couldn't put in all those security features and make it easy for the visually impaired people with that busy 3 Springbok that we have. But I don't take it as serious. I think that's Namibian humor.
Governor, we've received an online question. The question is, can we get a breakdown of the 3.5 billion that is set for the Eurobond repayment in terms of where it's being sourced from and when the payment is going to be made? Confirmation of that.
Okay. So Nick will take that one. Are there any other questions? We've got an MPC member that's going to give us that breakdown. Important to note before he gives us breakdown. I said, this is not a surprise. We knew that, and we had a sinking fund. So we set up money aside. But Nick will give us a breakdown.
Thank you, Governor, for those remarks. As mentioned earlier, we had a sinking fund that we've been building up for quite some time. So a significant part of the money that we're going to use for retiring this debt has come from that sinking fund. And then in addition, we were also setting aside some funds from the SACCO revenue, as also communicated by the Ministry of Finance, Then in addition, there was also a loan that was issued out in the domestic market. So a combination of that really has given us the balance to be able to settle that obligation that is due on the 29th. When do we pay back? It's going to be paid just before the 29th. So we are ready internally. We're in close consultations with the Ministry of Finance to make sure before the 29th that money moves over and is given to the institutions that are servicing that loan obligation. Thank you.
Thank you. Final check. Are there any other questions in the room? If not, can we please give the Governor and the MPC members a big round of applause? With that, we have now come to the end of our proceedings for the morning. On behalf of all of us at the Bank of Namibia, I'd wish to thank you very much for your attendance and your participation. For those of you who are joining us in the room, let us continue the conversation in the foyer outside. And for everyone else, until next time, thank you and goodbye.